Kimco Realty Stock, ticker symbol KIM. Is this the best REIT to buy right now? Kimco Realty is down 2.7% year to date, which is quite interesting since the overall market is up almost 6%. On the 9th of February, Kimco Realty presented their quarterly results where they missed on FFO but beat on revenue by a small margin. After earnings were released, the stock went down roughly 8% to the lowest point this year in the following days. But of course the reason why people love Kimco Realty is because of the dividends. Dividend yield sits at 4.5%, but the interesting part is that they have a negative 5-year growth rate number. So, is Kimco Realty a dividend trap or will they thrive in the coming years and are they a buy at current prices? Well, in this video I'm going to show you real quickly what Kimco Realty does. The most recent earnings, the fundamental analysis, dividends, and in the last part I'm giving you my price target to see if they are a buy or not. And I think you definitely want to see that part, so make sure to watch until the end. And I'm also very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So, what does Kimco Realty do? Kimco Realty is a real estate investment trust, also called a REIT. They engage in the ownership and operation of open-air shopping centers. It also specializes in shopping center acquisitions, development and management. When we check the earnings report, we see that revenue is up 3.5% year over year, which is not that high of course. But the thing I like here is that total operating expenses is nearly flat and operating income is increasing, meaning margins are increasing as well. One of the most important numbers with REITs is the FFO. In here we see that most recent quarter the FFO is down just a little bit year over year. However, on the 12-month period we see that the FFO is up quite a bit versus 2021. For the 2023 full year range, Kimco Realty expects to deliver a net income of 0.93 to 0.97 per share. And most importantly, a FFO of 1.53 to 1.57 per share, which easily covers the dividends for the next year. So this looks quite good to me, and of course comforts me a lot since Kimco is within an industry that was hit hard during the lockdown periods, which will be covered later in this video. Kimco is North America's largest publicly traded owner and operator of open-air grocery anchored shopping centers. Founded in 1985 and went publicly traded in 1991, so they have a proven track record within the business. Kimco has around 532 properties within their portfolio at an occupancy rate of 95.7%, which is of course something to keep your eye on. During the lockdown periods, Kimco was hit hard, as just said before, so occupancy rate went down big time. With 81% of the ABR exposed to grocery anchored centers, there might be a small risk of lower occupancy rates, so that's something to keep in mind with this company. Last but not least, Kimco has a Baa1 to BB Plus rating by Moody's and the SP credit ratings, which is fine by me. If we check the portfolio breakdown, we see that 46% of the ABR is derived from small shop tenants and comprised primarily of restaurants, dollar stores, electronics, liquor and tobacco, but also medical, fitness and personal services such as salons. Although it's very diversified, in times of economic pressure, these companies are hit the most, especially during high inflation, rising costs in general and all other things. This could be a risk of course. The other 54% of the ABR is coming from anchor shops. According to Kimco, there's a limited new retail supply, but more interesting is the store's closures that is near historic lows. Meaning, the store openings is outpacing the closures after the lockdown period, which comforts me a lot. In here we see a list of retailers of which Kimco is focusing on. There's a healthy mix of big and smaller companies, and also industry diversification looks pretty good. As said before, 81% of the ABR is coming from grocery, and the goal is to have 85%. They see a 2.4% year-over-year higher recurring traffic versus non-grocery and higher retention rates as well. This looks pretty good to me and I get why they are focusing on this segment. If we check the occupancy rate, we see that during the lockdown periods occupancy rate was hit hard. Right after things cooled down, the occupancy rate went up again. But still, I prefer at least 97, maybe even 98% for these type of companies. The last thing that I want to discuss before diving into the fundamentals is the net debt to EBITDA, which is at 6.4. They are committed to deliver 6 to 6.5, which is a little bit on the high side in my opinion. I prefer 5 to 6 instead of 6 to 6.5. But okay, that's something to keep your eye on. The dividend payout ratio looks pretty good at 70%, which is just below the average for a REIT, so this comforts me a lot. And now that we know more about this company, it's time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. Kimco is a 12.7 billion market cap company with a 5-year PE ratio of roughly 22. But since this is a REIT, I don't want to focus on the PE ratio but use the price to FFO instead. Price to FFO is at 13.97, so let's call it 14, which is fine by me. This could indicate that they are undervalued since it's below 16. Later in this video I will show you my 3 price targets for Kimco Realty, so make sure to watch until the end, since price to FFO is only telling a small part of the full story here. Revenue is at 1.7 billion, and in this graph we see that revenue is going up quite a lot most recently, which is after the lockdown periods. But before the lockdowns, they weren't really growing since 2016, so I'm really interested in to see what's going to happen in the coming years. Most recently margins went down quite a lot, so that's something to keep your eye on. It doesn't look really great in my opinion. And it's the same story with the EPS, definitely something to keep your eye on as well. Analysts expect EPS to stay around current levels in the coming years, which is something that concerns me a bit. Revenue is expected to grow at minimal levels in the coming years, which is also something that worries me a little bit. Return on assets is sitting at 3.6%, which is around the average for a REIT. And it's the same story with the return on equity. But it has to be said that these numbers are a bit on the low side. Return on invested capital, the most important number here, is at 2.2%, which is also not that high. And the thing is that worries me a bit as well is the fact that the 5-year average is higher than the current number. So that's also something to keep your eye on. And if we check the balance sheet, we see that current ratio is at 1.83, which is fine by me. I prefer companies who can pay down at least a third of the total debt with the total cash position. Right now total debt sits at 7.3 billion. While cash is at only 149 million. To me this doesn't look good and is something to keep your eye on as well. So it's very important that free cash flow is growing, since this is used to pay down debt, do acquisitions, buy back shares and all other things. In here we see that free cash flow was gone up and down quite a bit. It started to increase most recently, which is kinda impressive given the fact that they were hit hard during the lockdown periods. If we check the shares outstanding, we see that it was pretty steady for a longer period of time. But most recently they started to issue a lot of new shares. Usually this is not a good sign, but REITs issue new shares to raise capital and grow the business, so I'm not worried that much about this number. Next up are the dividends. Dividend yield is sitting at 4.45%, which is a really good number of course. Annual payout is at $0.92, and earlier in this video we saw the payout ratio is around 70%. And not the 560% displayed here. That's because REITs use FFO to pay out dividends. The 5-year average growth rate of the dividend is at -5%, which is of course not a good thing. They grew the dividends for only 1 year in a row, which is also not looking that good. But in their defense, during the lockdown periods they cut the dividends, and right after things started to cool down they increased the dividends again. Overall a decent looking dividend scorecard, but how about the historical returns? I decided to compare Kimco Realty Stock with the overall market, in this case the S&P 500. Next to that I added Realty Income and National Realty ticker symbol NNN. On the 5-year chart we see that Kimco had the highest return including dividends with almost 73%. National Realty was beaten by the S&P 500. On the 1-year chart we see some interesting things happening. Kimco had a -10% return while the S&P 500 was at -5% return. Realty Income and NNN both beaten the S&P 500. On the 6-month chart we see that Kimco returned nearly flat numbers, while the S&P 500 returned 4% and NNN again had the highest return. On the 1 month chart we see that all stocks had a negative return, so that's also looking quite interesting. The S&P 500 did best with only -2%, while Kimco did the worst with -8%. Bottom line, Kimco did beat the S&P 500 in the long run, but most recently it doesn't look that great. So could this mean that Kimco Realty Stock is still a buy at current prices? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 3% because of what we saw in the earnings report, and also because of the analysis estimations. For the mid assumption I'm filling in 4% and for the high assumption I'm filling in 5%. For the profit margin I'm filling in 34, 38 and 42%. For the free cash flow margin I'm filling in 48, 50 and 52. For the PE ratio I'm filling in 20 since this isn't a fair metric for REITs, but we have to fill it in. In the price to free cash flow I'm filling in 14, 15 and 16, because I think there's some growth but not at a high pace if you look at the numbers. My desired annual return is 12.5%, since I can get an easy 10% average annual return with owning an ETF. Right now Kimco Realty is at roughly $20. I hit analyze and we only see one green number. I'm only focusing on the discounted cash flow value and not the earnings value, since this isn't a fair way to value a REIT. We have a low price target of $16, which is a decent drop from where they are right now. A mid price target of almost $19, which is just below the current stock price. And we have a high price target of $21.8. To me, the mid to high price target is the most justified here. So that means that they are around their valuation. My final conclusion on this stock is that I do like the dividends and the way they handled it during the lockdown periods. It seems like a smart move and they are the way up again. The portfolio breakdown is quite interesting to see. They are focusing on a niche industry of which they claim to have better results with. With a proven track record since 1985, I think this is a great company, but the future might be very different. Given the fact that they are within their fair valuation and great dividends, I think this could be a buy if you want a solid dividend income. But from a value point of investing, I think there are better deals out there. And to be honest, I do like the other retail focusing REITs a little bit more. And remember to always do your own research and never fully trust on what I or other YouTubers say about the stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I'll see you in my next video.